What happens when a giant property developer crumbles? What is the limit of acceptable risk for a company like Evergrande? What are the consequences when a corporation takes reckless risks? In Shijiazhuang, the skeleton of an unfinished skyscraper isn't just a failed project, it's a glaring warning. Today, we dissect the Evergrande crisis and its ripple effects on the global economy. Once a real estate colossus, Evergrande teeters on the edge of default, not just symbolizing a company's downfall, but epitomizing the shockwaves reverberating through the world's financial markets. Evergrande's collapse was the result of a combination of aggressive expansion, significant debt accumulation, and the changing regulatory landscape in China's real estate sector. Hui Kaiyan, the founder of Evergrande, established the company in 1996 during a period of rapid urbanization in China. Local governments, needing revenue after tax changes, sold land to developers like Evergrande. The company grew swiftly, expanding to over 20 cities by 2009 and raising substantial funds through its Hong Kong stock listing, making Hui a billionaire. Evergrande's business model involved aggressive land acquisition, often financed by debt, and it diversified into areas like bottled water and electric cars. This aggressive borrowing and expansion were initially successful. The company began facing challenges when the Chinese government implemented new regulations aimed at curbing the real estate sector's reliance on debt. These regulations, along with a decline in property sales and increasing caution from banks and investors, led to a liquidity crunch for Evergrande. The company's practice of using wealth management products to help finance its deals, even involving employees' funds with quotas and penalties for non-compliance, further complicated its financial situation. When the real estate sales started to decline, the company's heavy debt burden became unsustainable, leading to defaults and sparking fears of a wider impact on the Chinese economy and global markets. The situation was so severe that some analysts compared its potential impact to the Lehman Brothers collapse, although the nature of the crisis was different, with Evergrande's situation being more reflective of structural issues in China's economic model and the real estate sector's massive role in it. The situation surrounding Evergrande's collapse is marked by significant financial and operational challenges. A Hong Kong court ordered the liquidation of the property giant after it failed to present a viable restructuring plan, and this decision has far-reaching implications for the fragile property market in China and investor confidence globally. Evergrande, known as the world's most indebted developer, had accumulated over $300 billion in total liabilities. The company's insolvency and the lack of progress on restructuring efforts led to the liquidation ruling, which is anticipated to be a long and complex process. This process involves considerations of how foreign creditors will be treated and the potential political ramifications as the courts decide how to manage Evergrande's substantial assets and liabilities. The company's operations, particularly in mainland China, where most of its business is located, face uncertainty. While the liquidation ruling is not expected to immediately affect Evergrande's operational units, including the completion of housing projects, the broader impact on China's economy and the property market is yet to be fully realized. The crisis has highlighted the systemic risks of high leverage in the property sector and has raised questions about the sustainability of the real estate-driven economic model in China. Evergrande's debt crisis resonates far beyond China, placing global markets on edge. Investors worldwide brace for the fallout, with financial analysts dissecting potential disruptions in everything from the real estate sector to international trade relations. The collapse of Evergrande is a testament to systemic failures, spotlighting corporate mismanagement and the critical role of China's regulatory environment. This debacle underscores the catastrophic consequences of unchecked corporate ambitions and aggressive expansion, questioning the adequacy of regulatory mechanisms in safeguarding against such financial catastrophes. Evergrande's saga, once a titan of China's property market, epitomizes the perils of rapid, debt-fueled growth. At its zenith, Evergrande's assets ballooned to 150 billion, yet beneath this prosperity, a mountain of debt loomed. The firm's aggressive expansion, characterized by pre-selling homes and hefty borrowing, became its Achilles heel. The Chinese government's Three Red Lines policy was the final straw, crumbling Evergrande's financial scaffold and drawing global parallels to the Lehman Brothers debacle. As we dive into Evergrande's collapse, the narrative unfolds a tale of unchecked expansion, aggressive borrowing, and speculative real estate investments. The liquidation of Evergrande signifies more than a company's end. It underscores the fragility of the global financial system, a crisis transcending real estate, eroding trust and confidence across continents. This crisis is significant, extending far beyond Evergrande's structure. It triggers a credit crunch, impacting businesses globally and signaling a stark reminder of our interconnected world. The fall of Evergrande reverberates from Shanghai's skyscrapers to Wall Street's trading floors, inducing a domino effect in credit markets and impacting businesses of all sizes. We scrutinize Evergrande's trajectory, tracing the fallout from Hong Kong to financial hubs worldwide, examining the effects on stock markets, investor sentiments, and the reassessment of real estate investments. The narrative then broadens, discussing the psychological impact on investors and the general populace. Specialists in finance and psychology address the critical role of trust in our economic systems. As the dust settles, the world confronts the fragility and intricacy of the global economy. Analysts and economists assess the potential effects on global economic growth and stability, posing crucial questions with worldwide ramifications. What are the consequences when corporate debt becomes unsustainable in a major economy? How do we reduce the risk of similar crises? In response, the world seeks solutions. The Evergrande saga teaches a crucial lesson about the strength of the global financial tapestry and the importance of each part's resilience. This moment serves as an urgent call for robust oversight, resilient financial structures, and policies that prioritize transparency and long-term stability. Policymakers, economists, and thought leaders discuss the way forward, highlighting reforms crucial for strengthening our global economic fabric. As the Evergrande narrative concludes, a new story begins, one collectively authored by the global economic community. It's a tale of interconnectedness, shared responsibility, and collective resilience. The decisions we make today will shape our collective future, ensuring every country, every company, and every individual contributes to our shared stability and prosperity.